Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 8th of the 2nd to Friday the 12th of the 2nd 2021. I've written the weekly flows up to get us underway, so let's have a look. Euro dollar then plus 81, so that means over the week Monday the 8th to Friday the 12th the euro dollar gained 81 points or pips, euro yen plus 28, euro pound minus 30, pound dollar plus 131, pound yen plus 92, and dollar yen minus 38. So let's look at the flows then. We just had a positive driver, opposed driver in the pound at plus 253. Now I say just because the dollar opposing front and backdoor flows were minus 250, so it was the negative secondary driver. So we had a strong pound over the week. The euro was the positive rock at plus 79. The yen was the negative mover at minus 82, and as we said, the dollar was the negative secondary driver at minus 250, and this was an activity of plus or minus 332. So we're going to start now and write up the daily flows before we do the analysis. So don't go away, see you in a minute. Right, welcome back. I've written up the daily flows, so let's get going. So Monday then, the first day of the week, the 8th, we had a negative opposed driver in the dollar at minus 44. Front and back door flows then going mainly into the pound at plus 35. Less so the yen, and the euro was the negative rock. Activity plus or minus 46. Tuesday then, quite significant activity then on Tuesday. We had the dollar as the unopposed negative driver at plus or minus 233. So no backdoor flows. Posing positive flows going very evenly into all the three complexes, the yen plus 79, the euro plus 73, and the pound plus 71. Activity 233. Wednesday then, unbalanced flows again. We've got the pound this time being the unopposed positive driver, so a big swing there on it, but low activity of plus or minus 46. So the pound was plus 46. No backdoor flows, opposing negative flows going mainly out of the dollar minus 19, next out of the yen minus 16, and the euro minus 11. Thursday, the 11th, we've got more balanced flows at activity of plus or minus 87. We've got a positive opposed driver in the euro at plus 63. Front and backdoor flows this time going mainly out of the yen minus 56. And the pound minus 31, with the dollar being the positive rock at plus 24. And finally, Friday the 12th, last day of the week, we've got the pound being the unopposed positive driver at plus 131. No backdoor flows, so we've got opposing negative flows coming mainly out of the yen at minus 95, next out of the euro at minus 34, and the dollar was the solid rock at minus 2. And that was an activity of plus or minus 131. Right, so those were the flows. If you remember, just grab this. Basically, what happened this week? We had the Chinese start of the Chinese lunar holiday. That was Thursday, running through to Wednesday next week. So that was something to bear in mind, and if you look at, I'll just rub this side out. If you look at what happened in the wider market, so let's just remind ourselves then. So over the week then we had pound strength at plus 253, and dollar weakness at minus 250. So there wasn't a lot in it. It's very close as to who was driving the market. It was nearly the dollar driving negatively, or the pound actually just got it driving positively. So you had pound strength and the equivalent dollar weakness, and then you had the euro and the yen being in a situation of static dynamic equilibrium, if you like. So the euro was plus 79 and the yen was minus 82. So the action really was in pound strength and dollar weakness over the week. But if you look at it on a daily basis, so I mean, this is why we've got unopposed positive driver on the Wednesday for the pound, unopposed negative driver Tuesday on higher activity for the dollar. So and then finally we've got this pound strength reoccurring again on the Friday, as the pound is the unopposed positive driver at plus 3.1. In the wider market then, so if you look at the dollar index, so which is the basket of 6 currencies with basically a massive weighting on the euro. Roughly 50% of the dollar index is the euro, so it's a sort of inversely correlated more or less to the euro, unless something major happens in the other complexes. So, well, the dollar index looked sort of look like this, and it's had a little perk up, but basically the dollar, as we can see, has been weak. And that ties in with our analysis. And then if you look at gold, so with a weak dollar, you'd normally expect gold to be on the up and happy. There's a correlation there between a negative correlation between gold and dollar prices normally. And if you look at the gold, you know, we're looking roughly here. So why hasn't gold pumped? Well, as we said earlier in the week, there's many factors going on, but the main factor we believe is gold has been actually supported in a way by this weak dollar, but yet it's still not managed to pump, and we believe it's because of the rising yields and in the US, and also the fact that equities have really gone to the moon, and therefore gold is quite often viewed as a safe haven as well. So there's been massive risk on in terms of equities. So arguably that's the reasons for that. Oil, on the other hand, oil is pretty much let's have a look. Has joined the party on the up. So oil is buying into this sort of global bounce, if you like. So that's oil. Right. What does that leave us? That leaves us with, just get rid of this. That leaves us with equities. If we look at Wall Street or the Dow, effectively, the tech and the S&P. They've all got this sort of V-shaped bounce, which is above the high, and there's no obvious leader or laggard there. There has been in the past. Wall Street was dragging its heels. Now it's caught up. The Nasdaq was leading, and now it's they're all relatively in the same position, which is interesting. So you only tend to get this divergence in these three for relatively short periods of time. Right, what else have we got? We've got the US 10-year yield. No, sorry, the US 30-year yield is greater than 2% for the first time since February 2020. So we've got this concept of yields rising in the US, which ties in with what we've been saying about gold, etc. And if you look at this in an old school sort of Keynesian economics perspective, you've got this situation where they're deliberately trying to run the economy hot, they're trying to have injections greater than leakages effectively, and they're arguing that this is okay because there's an output gap. In other words, we've got unemployment in the system, and therefore that can take up the slack for this rise and tamper down this rising expectations of inflation. Well, it's a nice theory. We'll see if it works anyway. And what else have we got? We've got copper, which is a good indicator of global situation quite often. We had this sort of dirge period where it sort of wasn't buying in, and now it's completely joined the party and is sort of really mirroring US equities in that sense. So that's where we are there. Right, so what else can we say about the week? Well, the flows were quite swingy. You know, you've got these changes in unopposed positive and negative drivers, which basically means that the market was swinging backwards and forwards and making it very difficult to hold trades over any given period. Yesterday we suggested that the pound was, all the full complex pound pairs were being sold off and full complex dollar pairs were being bought. Now that was true in the Asian session. As soon as the GDP came out, which incidentally, what did they say about that? Basically, they said that the output overall, the GDP output at the beginning was pretty disastrous due to the COVID shock, and however, subsequently in the fourth quarter, the last quarter, we've had a bounce, and that basically knackered any pound weakness in the pairs, and you had this like reversal and fairly rapid ramp up in the pound. So, and we were short pound dollar, and we've just bailed out pretty much at break even. And then the next interesting story was that the New Zealand dollar complex was being sold off across the board, and we shorted the New Zealand dollar across the 7 FX pairs for about 150 points profit. However, that's a side issue. Anyway, what do we know going forward? Monday is a light day today, and not only that, the Americans are off on holiday for President's Day, and as we know, the Chinese are off for their lunar weekly break. So we've got the classic situation here of light data on the Monday, with market holidays in the big players. End result, somebody is going to have a go, and you know the people that are going to have a go are the London boys. The London boys are going to have a go at the market on Monday because I've said that is their ideal scenario. Not much data to come out to wreck their plans, and thin liquidity. Their muscle will be augmented by these market holidays. So I hope that was useful. We're going to do the link-in video, which is the data cycle for that period, Monday the 8th to Friday the 12th. We're going to bring that out today. That fills in a lot of the gaps, so try and catch that if you can. If not, we'll see you Monday for our take on the market analysis. We should be able to pick up what these people are doing through the flows early Monday morning, and we'll pass that on to you as soon as we can. So, as I said, hope that was useful. See you soon. Thank you.